Welcome to NFT.eu's weekly recap. I'm Serge, editor-in-chief of NFT.eu, and today we're looking at the biggest stories in crypto, artificial intelligence, and Web3. I will cover the markets, some shocking crashes in new technologies, and even whiskey going on the blockchain. Let's get started. This week, Bitcoin dropped sharply to $112,600. The fall triggered a wave of fear across social media, with many traders worried that history might be repeating itself. Analysts compared the current pullback to corrections from past cycles. Some are saying this could be the early stages of another long downturn. Others believe it's just a normal pause before the next rally. Either way, the move reminded everyone that crypto markets are never calm for long. Ethereum, on the other hand, managed to climb slightly. It rose to $4,345, gaining just under 2%. It's not a dramatic increase, but in a week dominated by fear and red candles, even a small rise feels like a good news. For many investors, this was a sign of resilience compared to Bitcoin's weakness. Now to the one of the most dramatic stories of the weekend. Rapper Kanye West launched his own meme coin called, guess, Easy. Within minutes of trading, the token collapsed by 50%. For retail investors, the losses were brutal. During a live stream, a popular content creator named ADVYTH put his entire deposit into Easy, YZ, and instantly saw half of it vanish on screen. Analysts estimate millions of dollars in losses, with thousands of traders exiting the project in the very first hours. Critics are calling it a textbook example of insider trading and how not to launch a token. For the crypto community, it's yet another reminder that celebrity coins are often more hype than substance. Pool coins, yeah. You can name every coin from celebrity a pool coin, because in the end of the day, it's gonna become a pool. Moving to the world's largest exchange, Binance reported the lowest ever level of its buy and sell order ratio. This suggests that short-term holders are unwilling to take losses, but also too nervous to increase positions. It's a sign of weakness and hesitation across the market. Many analysts interpreted this as a bearish indicator. As a coming. There was, however, a major breakthrough in decentralized finance. The 1inch network launched a new system that allows direct swaps of assets between Solana and more than a dozen EVM-compatible networks. In simple terms, this means traders no longer need bridges to move value across chains, and they are protected against front-running and other types of MEV attacks. This could set a new standard for multi-chain trading, making it faster and safer for users everywhere. Beyond trading and tokens, the media industry itself is facing big changes. Several crypto news outlets announced closures in the past weeks, blaming rising costs and competition from AI. At the same time, Coindesk, one of the largest crypto media companies, officially adopted artificial intelligence in its newsroom. The move sparked a heated debate about bias, accuracy, and control, and we are heading towards faster, more automated reporting. Are we heading there? Or will the voice of independent journalists be replaced by algorithms? The shift could reshape how crypto news is produced and consumed. Artificial intelligence is also reshaping financial markets. Two platforms, Fetch.ai and Bittensor, now dominating the global trade of machine learning models. Together, they represent a market worth over $12 billion every month. This new type of marketplace allows AI models to be bought, sold, and integrated into the systems. Instead of trading only coins and tokens, traders are now exchanging computing power and intelligence itself. It's a sign of how AI and crypto are merging in real time. I'm leaving trading, that's it. Yeah, I'm gonna be trading AI agents. Another growing trend is the rise of wallet super apps. These new wallets are not just for sending and storing tokens, they combine automation, decentralized finance, and multi-chain access in one place. Think of them as the Web3 version of WeChat or PayPal, where everything can be managed from a single app. For users, it simplifies a world that often feels too complicated. It always feels too complicated for me. And it could accelerate adoption among mainstream audiences. Let's take a look at culture and the real-world assets. Bowmore, one of the most respected whiskey distilleries, has launched its first series of tokenized bottles on the Avalanche blockchain. Very strange choice. Pre-sales already open and the official launch will happen in this year. For collectors, this creates a mix of physical luxury and digital ownership. Instead of just drinking or displaying rare whiskey, buyers can own a digital twin of their bottle secured on-chain. And your digital copy can drink it after an argument when a digital copy of its wife. Some see this as the future of collectibles, where physical and digital value become inseparable. Another major theme is decentralized infrastructure, also known as DePIN. Projects like Helium or Filecoin are showing how networks can transform connectivity, storage, and even energy into decentralized public goods. Imagine drones that charge themselves without human help, or sensors that sell their own data directly to buyers. This is no longer science fiction. These networks are already being used around the world. DePIN could redefine how businesses and communities operate, replacing centralized systems with open and self-sustaining alternatives. Finally, let's talk about the social impact of crypto. The nations made with cryptocurrency are expected to surpass $2 billion this year. This growth is being driven by decentralized autonomous organizations, tax benefits for donors, and the rise of AI-powered platforms that match funds automatically. Compared to traditional charities, crypto philanthropy offers transparency and speed. For many, it's proof that blockchain can deliver real-world impact, not just speculation. But we're still here for speculation. At the same time, decentralized AI marketplaces are gaining momentum. Fetch.ai and Bittensor are not only leading in trading AI models, but they are also shaping an entire movement known as DAI. Decentralized artificial intelligence. In this model, intelligence, data, and computing power become tradable assets on open networks. It's a powerful idea. AI no longer belongs to just a few corporations, but is accessible to everyone, even you and me. And of course, the breakthrough in DePIN keep coming, whether it's global internet coverage, sustainable energy, or storage solutions. Decentralized physical networks are evolving quickly. Each step brings us closer to a world where machines and devices operate autonomously, exchange value directly, and reduce the need for human middlemen. That's how they call me at school, middleman. That wraps up the week's recap. From Bitcoin's sharp drop to Kanye's failed KuCoin, from AI marketplaces to tokenized to whiskey, and from super app wallets to decentralized infrastructure, it is clear that the world of crypto and Web3 is moving faster than ever. Thank you for joining me. Be sure to like, share, and subscribe for more updates. And for full deep dives, exclusive insights, and daily coverage, visit us at NFT.eu. We'll see you next week with more stories shaping the future of crypto, AI, and Web3.